Welcome to this Opto Opportunities event, Thematic Investing in 2020. The products we're going to be introducing you to tonight have many of the benefits seen from index-based investment strategies, typically known as passive investment, combined with the outperformance of the index commonly seen from actively managed funds. I'm Ed Gotham. I've been trading and investing for about 10 years now, and my journey started with an investment in RBS, £1,000 investment in RBS, after a significant pullback in the markets. And I went in around about the 2,000, 2,200 level, somewhere around there. What I perceived to be a great purchase price. It looked cheap. Little did I know that it then proceeded to drop 90% of its value to around 200 it went down to, actually. And this was during the financial crisis of 2008. And an important lesson was learned that day, that just because something's pulled back a lot does not mean it's cheap. Something I've had to endure a few times since then, but I can safely say it's like ingrained within me now. Something we'll discuss later is how to avoid this sort of thing. Since then, I've been a full-time day trader for about 3.5 years, progressively moving into more longer-term investment strategies in thematic-based investment strategies combined with some swing trading in indices. Wider move, I genuinely believe that the thematic-based investing is one of the best ways to achieve above-index returns in the stock market long-term. Secondly, compound interest. Now, Albert Einstein once said compound interest was the 8th wonder of the world. Those who know about it earn it, and those who don't pay it. Now, why is that? I'm just going to ask a quick question. So, if I was to give you the choice of either £1 million today or a penny that doubled in value every day for the next 30 days, which one would you choose? And it sounds pretty simple on the face of it. £1 million is obviously a lot more than a penny. But if I show you here, that penny over that 30-day period, doubling in value, actually ends up being 5.4 times the £1 million. Now, this is quite an extreme example, but it does show you the power of compounding interest over time. And one of the most important aspects of this is that it's only very late on in this curve, so on the 27th day, that it passes the value of $1 million. And so the thing is here is that the important variable with compound interest is time, and it's important that time is taken in importance when investing like this. The gains get substantially bigger over time, exponentially bigger. And so you have to think long term in a lot of this stuff. Since then, so last year, I co-founded Opto. Opto was created to highlight the most compelling opportunities and trends in the stock market, so you can make smarter investment decisions. Why the stock market? As I've touched on already, we believe it is generally one of the best ways to achieve above-index returns, not just above-index, but above-average returns in the markets. We started this a year ago, but yeah, it's now 30,000 people. It's a community of over 30,000. It exists as a print magazine that's a quarterly print magazine and online. In addition, we have a newsletter that's sent every day during the trading week. Gives you a daily digest, everything you need to know basically during the day, so you don't have to go out and get that information yourself. And we are also very lucky to work with some of the brightest minds in the investing and trading community. People such as Jim Rogers, co-founder of George Soros hedge fund, William Hobbs, who's a chief investment officer at Barclays Capital, and even colourful characters such as Anthony Scaramucci, who you might have seen before. He famously was the director of communications for the White House for Donald Trump, and was fired within 10 days due to a controversial leadership style. But the thing is, he actually is a very, very successful hedge fund owner as well. He's the founder of Skybridge hedge fund, and who is one of the best performing hedge funds over the last sort of 10 years. So he's very experienced and knowledgeable in that area. We did a profile on him last year. It's actually in that magazine I just showed you. And we went into depth on his trading strategies and approach, touching on some of the politics as well that he's involved in. As a quick disclaimer for tonight, the main takeaway from this is what I'm talking about is not meant to be seen as advice at all, it's just guidance. And yeah, I'll just leave that there for 1 second. But yeah, that's an important thing to take in. Okay, the plan for tonight. So I'm going to go over what and why of thematic investing. This includes a profile on the FANG Plus index, which is a very popular theme-based index that's from the US. We'll dig into specifically diversification and the benefits of that. The FANG Plus is a case study on that. We'll then go over how to invest in themes. There's numerous ways actually you can invest in themes or trade themes. There's 3 that we'll cover tonight. So you can go away and take advantage of that if you think it's a good opportunity. And then we'll finish with the 3 themes to watch in 2020. I've been working with Opto. We're obviously on top of the markets every day, all the time. There's certain trends we start to see in the markets. We picked 3 of the themes that are very commonly talked about by investment managers we work with, etc. And we've actually gone into depth with some criteria about some products within those themes that might be interesting for you as well. So what is thematic investing? The simple sort of idea behind this is that it's buying a collection of stocks who are all linked by a specific business activity. Now these can be quite large macro trends such as renewable energy or big tech, or smaller but still significant trends like cybersecurity, driverless cars, and even things such as cannabis, which has been a very volatile but highly popular sector of late. Now, what has happened over the last sort of 10 years or so is that there's been an explosion in products that represent a certain theme. So rather than buying, say, 1, 2, 3, 4, 5 stocks that exist that are in a certain theme, you can now buy products, just one product instead of like buying many to take advantage and get exposure to that theme. So what? It's not a lot different. You could have chosen to buy 6 stocks now, today. Like, why should I now just buy this theme product? It's pretty easy to buy 6 stocks myself. Or you might be saying, I already achieve a very good returns for my index-based investments. I'm not really sure if these are the right products for me. So we're now going to go over some of the main benefits from theme-based products. And the first one we'll cover is ideas. Now, it's far easier to buy a product that's already been created for you than do the research to find these yourselves. And these products have been created by some of the smartest minds in the industry, some of the best fund managers, etc. And they've basically done the hard work for you. So that's one of the main benefits of it. In addition to this, actually, some of these companies are really at the forefront researching and analysing trends in the market and finding the new innovations that are really taking shape and growing quickly in the public markets. So you don't have to be doing that yourself, basically. So they've done a lot of the hard work for you. Diversification is the second point. So these products are well diversified. We'll go into depth on the details behind that later on. But the basic premise is that through diversification, there's lower risk, and you're more likely to get consistently better returns in the future. So all these products are quite well diversified within their theme. Ease of access. So a lot of these products are very easy to access. They can be bought or sold as easily as stock. No complex ways of doing it. And lower costs. This does depend, the costs do depend on the product. There's different costs for different products, but they typically have lower costs than other ways you might try to get above index returns through actively managed funds. They have lower management fees, most of them. And also things such as no stamp duty on ETFs. And ETFs is a product we'll discuss. Obviously you pay stamp duty on any individual stocks you buy. And the main thing that brings all this together really is performance. So these products do offer above index returns. And this is even when indexes are performing exceptionally well over the last sort of 5-10 years. Not all themes obviously perform as well as others, but if you're looking for above average above index returns, then there's products here that offer it. This is an index by Bessemer Venture Partners, the NASDAQ Emerging Cloud Index. And you can see here, this is a theme-based product that focuses on emerging companies that are public in the cloud, so software companies. And it's made up from this venture capital company called Bessemer. And they're at the forefront of this industry and are able to create this index with stocks that they consider to be the most innovative in that area. Hello?
Is it before or after fees?
This is just an index. So this is literally just the price movement since inception. To invest in an index, you'd have to use a product to do that. So it doesn't. The fees would depend how you're accessing the S&P 500, NASDAQ, or this product. But they do all exist as ETFs. ETFs typically have, 0.5% a year as it's sort of like an average, I suppose, for management fees. But I couldn't tell you exactly what the costs are for these at the moment, but they would be similar, for sure. In fact, we'll go into detail on one of those later. And you can see here 505%, so this is since August 2013. This index has performed, I think it's 523% from memory. In comparison to, these indices have done incredibly well over this period as well, but we're seeing 150% I think from the NASDAQ, this green line. The Dow and S&P 500 are around about 100%. So considerably higher. In fact, astonishingly higher. This is incredible returns, really. And this is not unique to the, this is one I pulled out. This is only the last year. This is because of the company that, it's the best chart I could get from this Motif, which is a company we'll discuss in a minute, but creates very complex, sophisticated products in this area as well. And we can see over the last year, another great year for the S&P 500, which achieved 25%, I think this is here, and there's about 37% for this online gaming thematic portfolio that has companies such as Activision Blizzard and Electronic Arts, among others. So the thing I want to reiterate here again is the main reason why we're discussing these products is because they have many of the benefits seen from index-based trackers. Diversification, ease of access, lower costs is some of the main reasons that ETFs have been so popular of late. But on top of that, there is the potential for outperform performance of the index to get higher gains, sometimes significantly so. The flip side of that is that a theme is obviously concentrated in that area, and if something happens to that theme, you're possibly disproportionately affected by it. Now, any guesses to what chart this is? No? This is it's actually the S&P 500 is the red line, and the blue line is the NASDAQ 100, the US tech index. And during the tech bubble in 2000, there was a huge growth in the NASDAQ 100, which then burst in 2000 in that recession, and it proceeded to decline. I'm pretty sure it was just over 90% of its value was lost. And if we compare that to the S&P 500, which I think it was only around 50%, which is still very significant, but the difference is substantial. And that's because there was a big crash in technology, in software. And the NASDAQ 100 is an index. There's really, that theme is around US tech. And so it disproportionately was affected by that, although it has gone on many, many years later to do exceptionally well. So this is what can happen. So you've got diversified within a theme, but that theme obviously is subject to changes in the market as well. It's just to be aware of that. So now we're just going to jump into the FANG Plus index. A quick case study on that. So what is the FANG Plus index? This is an equally weighted index of 10 companies, the largest, well, some of the biggest, most innovative companies in software and media, basically globally. And it's primarily made up of US companies, as many of you know today, and a couple of Chinese companies, Alibaba and Baidu. Now, what's important here is that these stocks all have an equal weighting within this index. Now, this means that a 10% movement in, what's a good example here, Twitter, would equal, to have the same impact on the index price as a 10% move in Apple, even though the value of that 10% increase in terms of revenue market cap is a lot higher in Apple. Now, there's no right or wrong way about doing this. Different products are constructed in different ways. What's important is when you're choosing to invest trade a product that you know exactly how it's constructed, so you understand what it's influenced by. But this is an extremely popular index from the US that's, I think it's not been around for that long, 2 or 3 years or so. So this is the FANG Plus. I think this period, it's not actually 5 years when I look back. It's about 3 years. This is just the Google charts. It's the maximum I could go to. But it's showing the FANG Plus over the last sort of 3-year period versus S&P 500. And we can see here that the FANG Plus has around about 120 or so % gain ahead of S&P 500. So this is simply showing the right theme product can outperform the index, even through a period where the S&P 500 has been doing particularly well. This is the FANG Plus versus NVIDIA. NVIDIA is the creator of the GPU, graphics processing unit. They're a hugely successful stock. They've done incredibly well if you look back like over the last 10 years. Insane gains, but in this period of time, it's not achieved as high a gain. It's half the gain as big as the FANG Plus index. But it is one of the constituents of the FANG Plus index. Now, the important thing here is that back late 2018, NVIDIA had a lot of success off the back of the crypto boom. And during that time, there was also a pullback or slowdown in the Chinese economy. And basically, NVIDIA was disproportionately exposed to that and had a big sort of decline in revenues against what they were predicted to. And so it had a bad period over that time. But subsequently, it's come back to quite a good level. But still not as good as the FANG Plus. So it's actually, because it's a constituent of that FANG Plus index, it would have been pulling that down because it's, the percentages are lower. Now let's compare this against Apple, who is also in the FANG Plus index. Now this is the same time period. Now, Apple has performed a lot better, like 50% or so better than the FANG Plus index. And this would have been pulling up the price of that index. But the index, it actually outperformed the index. So the main thing here is that even though, so there's 10 stocks in that index, some will outperform others. Obviously, the best choice would have been to choose the best stock in that index, which is Apple. You would have made that's the obvious investment decision here, because that index outperformed the S&P 500, outperformed NVIDIA, but it did underperform against Apple. And I didn't do every stock in that index, but some of them would have done better than others because it is the average of the performance of those stocks. And the main thing is if you would, in hindsight, trying to predict whether or not this group of like high growth, high potential stocks, which ones are going to perform the best, is exceptionally hard to do. And also, individual stocks are subject to changes in the market which you are unable to sort of predict. You couldn't predict that NVIDIA was going to be so exposed to a crypto crash. You could have predicted that, but you wouldn't have known, is that going to come in the future, and Apple are unlikely to be affected by that. But they're both, because back when we were the initial point when we started looking at this, it was 2.5 years ago or something, both of those stocks had very, very high sort of consensus that they were going to do very well. And they have subsequently done very well. But the main point I'm going over and labouring a little bit is that by investing in an index that's an average of that theme, you'll typically, you have a higher likelihood of getting better gains over time rather than trying to cherry pick the best one from that index. And you might do better, you might not. So that's one reason why diversification works well there. And there's different ways you can diversify. We talked about just doing one stock, but the risks with that are that something disproportionately happens to that stock and really gets it going the wrong way. And then Warren Buffett, who suggests about 10 to 20 stocks is what his sweet spot is. In fact, he says even here that most of that goes into 5 or 6 of those, and then it's split among 10 to 15 others. And he's famous for saying that if he's found the stocks that he prefers the most in the markets, why would he choose choose another 10 stocks that he doesn't think are as good and put more money into them? Over diversification, he's sort of implying is not a good strategy if you know that these stocks are the ones that, or perceive these stocks to be the best performers. But there's many different ways of constructing diversified portfolios. Funds, ETFs are normally around 30 to 80 plus in individual ones, and the S&P 500 is actually 500, so it's a very big diversification there across multiple industries as well. Theme-based products sit in this sort of sweet spot here. So they have well diversification within that theme, but obviously that theme is not diversified in the whole equity market. You're trying to pick the themes that are going to outperform against the sort of the indices, basically, the index-based benchmarks. Not all products are equal, though. This is what we just sort of touched on. This is a biotech ETF from Spider S&P against the S&P 500 index. Biotech is actually coming to be a sector that's very highly sort of thought of at the moment, and there have been some biotech ETFs that have done exceptionally well. This one hasn't. It's done okay, it's 31%, but it's to be underperforming against the index isn't great. Otherwise, why do anything else but invest in the index? And the reason why is it's constructed of every single biotech company that's listed on the New York Stock Exchange. So although it's well diversified in biotech, it's got all the worst companies in there, it's got all the best companies in there. So actually, performance hasn't been anywhere as good. Some other biotech ETFs have done exceptionally well because of the constituents within them that were those smarter decisions on what they were constructed by. There was no smart decision in this sort of S&P biotech ETF. They had there's no preference for which stocks they'd choose. They just literally chose everything in the New York Stock Exchange that was listed there as under biotech. And it's just, I suppose what I'm saying here is it's important to know what these products, what's inside these products and how they're constructed before you go and invest in them. So now we'll jump to how can I access themes. The first one, ETFs, product that probably most of you know today. The interesting thing is that there's been a massive boom in ETFs. Bank of America thinks this ETFs industry, it passed hedge funds in terms of assets under management last year. And Bank of America perceives them to be around 50 trillion invested in ETFs by 2050. Huge growth in that market. What's also happened is the range of different products that are available are massive now as well. Not only are they doing index-based ETFs, which is what most people know them for, they now do theme-based ones and a vast range of different other ones as well. And many things or themes you could think of probably exist as products in ETFs industry right now. And obviously they can be accessed through stockbrokers and other places as well. The next one I wanted to focus on is Thematic portfolios by Motif. Many of you probably don't know this company. They're a US company. So the reason why I've highlighted them here is that so they make thematic portfolios, typically slightly less constituents within portfolios, around 20 to 30 is their sweet spot. ETFs are quite a bit higher normally. And the exciting thing behind their products is that they are focusing on innovation, basically. They very quickly make products based on the most innovative sort of trends they see in the markets. They're researching the markets all the time and keep on top of the new sort of economic trends. And a lot of the things you may not even heard of, they're creating as potential portfolios you can take advantage today. And through the growth of those industries, you obviously can gain some good percentage increases. The other very important thing about them is that they're very smart in how they construct their portfolios. For example, they have an artificial intelligence one, but the stocks within there, for example, I think Google is within there, but obviously most of Google's business activities isn't artificial intelligence. So the way they construct and weight these portfolios with the stocks is they'll give a weighting to each stock based on what part of their revenue is generated from the theme that they're sort of in. So for AI, I think there was a very small percentage on Google that was actually related to AI, so that had a much lower weighting in that portfolio. So they're a bit smart about how they sort of like construct those. Finally, so CMC Markets have got something called share baskets that are coming out in, I think, about a month's time, or just over a month's time. And similar to the thematic portfolios here, they're constructed around 20 to 30 different equities. So actually, I think I've got a slide here. So this slide we went over, this is an early indication of the products that they will be available. And this is important if this is another way you can access themes through spread betting or CFDs. Some of the benefits of if you're sort of interested in that area through spread betting obviously is leverage trading. Risks are associated with that obviously, but that's one of the benefits of going that way as opposed to maybe trading ETFs or thematic portfolios. And in addition to that, for spread betting, there's tax-free on profits in the UK, although it can be depend on individual circumstances. So that's some of the products that exist there. We're now going to cover the 3 themes to watch in 2020. So I've been working with the Opto team, as I said earlier, that we sort of, well, obviously on top of the markets the whole time. We're talking to a lot of fund managers, interviewing all, and these are the sort of themes that have sort of been prevalent over the last year or so that we've seen them start to get very interested in. Obviously, it's interesting to see those trends because once the big money starts getting involved in something, you tend to see sort of good price movements in that. And so we've picked 3, and then we gave some criteria to try and select the products, some products that exist within these themes that are potentially some of the better performers in that area. So the 3 criteria we set for that are 1, they have to be in a long-term uptrend. So we looked at 3 years. Trend is your friend. Like we've looked for ones that are easier, more potential for upside gains. The other one is it's got to be within 10% from the all-time high. This is an interesting way of approaching filtering and finding equities to go long in because at all times high there's no technical resistance for equities or on any chart there's no technical resistance and it sort of like just confirms the fact that there's good momentum in that equity or product and a lot of interest. So the last criteria for this was it had to have above 1.5 times index return in the past year. So those are 3 criteria that we've taken to choose these products. So the first one is cloud computing. You'll notice this chart is from before. This is actually the ETF which tracks this index, which is an ETF by Wisdom Tree. And I know you asked about the price earlier. So I've actually, a disclaimer here, but this is actually one of the ETFs that is in my portfolio. It costs about 0.7% a year in management fees, but it's free to buy, no stamp duty or anything. And we can see here, this is over 3 years, gain of 207% as opposed to 66 for NASDAQ, and the others are around 40%. So massively above index returns. As we said, this is created by Bessemer Venture Partners, a VC in America, that are pretty much at the forefront of investing in companies, and many of the companies in here are some of their investments. And you would say that they probably got some of the best insight into what stocks to choose to be in this index. The best, most innovative stocks in the cloud. Primarily US stocks, such as Adobe, DocuSign, Shopify. But this is one of our sort of picks for tonight. Second one's called Digital Dollars. This is a thematic portfolio by Motif, which we mentioned earlier. So Digital Dollars, there's a war on for your digital wallet. Basically, cash is starting to disappear, and there's companies that are involved in electronic payments and such that are growing at astonishing rates, such as I think some of the constituents of this are Square, MasterCard, Visa. Visa in particular has been doing a lot of M&A recently with some interesting companies in the area. They're doing exceptionally well. PayPal as well. This is last year against the S&P. As you can see here, towards 80% increase on the S&P over last year. So that's our second one, digital dollars. Third one is renewable energy. That's a theme, and this is the ETF we've selected is Invesco, Wilder Hill Clean Energy ETF. This is a pretty interesting one, to be honest, if you look at this chart here. So we've seen about 50% over the last year, in comparison 21% S&P. What we've seen particularly over the last year or so, as you can see in a lot of different industries, that renewable energy, clean energy, things like this is becoming extremely popular, and it's done particularly well in that period because it is increasing demand in that industry for people in this area. There's been a huge trend in impact investing as well, which is investing in products or equities that are doing well for the environment, etc. So this ETF in particular focuses on businesses that are going to impact well from the transition to clean energy and conservation. So there's a lot of companies here you probably won't know. The only one you probably would know was Tesla, who's obviously in here, who obviously owns Solar City as well. So that's involved in the solar market as well. But there's other innovative companies such as Bloom Energy, I think that's one, that create fuel cells that make electricity on site. So a lot of companies doing very innovative things. This is like mid-cap, small-cap companies. This is very much more on the innovation sort of area. And it's been done particularly well over the last sort of year.